morning, class. Welcome to Homeroom with Unk and Market Monk. Good evening, P. How was your week?
For me were kind of opportunistic. Um, a lot of stuff isn't really holding up after earnings that well, so you get a lot of retraces to the downside. So early puts on Affirm and you, and then stuck with some crypto and a couple other things. But yeah, good overall.
Nice, nice. I really didn't have many trades this week. Shout out to Vegas and my Portland trip for that. Um, did have a little bit, like 200 shares of NVAX. Had some bros. Just took profit on there because don't really have a big feel for the market. But it was more of another one of those just sell what you have, what you've been DCA in week for me. Still a little defensive or protective. Picking direction right now, overall market. It's kind of hard. When we get to SPY, you'll see we're still kind of inside that one candle that dropped real far in the previous high. We're kind of stuck in that range. So tell us some clarity. It's protect the neck over here for sure.
The best ones are some of these smalls that we've just kind of parked in for a while, and have just seen that there's a move coming. It's not necessarily imminent, but it's also not 6 months from now. So that's been paying off. And then a lot of stuff I follow is just in a pretty big range, but hasn't really picked the direction. AVGOs like that didn't even get to 1350 last week, which I better do that pretty quick, or it's just going to go the other way. So yeah, I mean, there's you don't really want to stick your neck out on a lot of major tech right now, I would say.
Yeah, I think we've been upfront about that for more than 2 months. Like we're going to have a divergence in the
Yeah.
market. Those are going to trade sideways. It's just not an ample time to enter those. You almost need a flush on most of the big names at this point. Not necessarily to support, but to a higher low. Because I mean, we run into that all the time when we go back and forth with our systems, where I'm like, I have nothing for you yet. I just don't have a level built up here. So you're really flow dependent on a range that is much narrower. It seems like on those household names or those stocks that you do want to hold for the lifetime. But these shitty pennies, man, they have been paying. Couple that with the sectors like the copper and the aluminum and stuff like that. Gas even we did good on Dino. All those things have been doing well. I think if you're greedy right now, you're probably getting your ass kicked. But if you know how to repeat a process, you're probably doing more than keeping the lights on currently.
Yeah, absolutely. And I think too with earnings, the best thing that you can see happen is a flush of anywhere 12 to 20% on, especially on software like DDog, because those do bounce back. The the caution there to me is that a lot of times you will bounce. I always talk about the half candle move, but DDog, it was like a quarter candle. It can go ahead and retrace back down from here. So you really don't want to, if you're not going to catch that initial rebound. I think you're good to wait and let the setup take shape. Don't just pile into it full at this point, because that's what the 3 day rule is all about. It's about just sort of seeing how the stock's going to react and sort of what takes shape from there. So there is usually an initial trade right after a big flush like that, but that's not usually a swing entry in my experience.
No, you just got to play that again. That's the not greedy part, P. Is you got to just take that range. I mean,
Yeah.
it was $17 if you high loaded that. So if you got 12 to 14 out of that move, you did really good. That's still a 10% trade, and you're not making 100% on that right now. But 10% is good money. Make 5 and 10% great again. Definitely a theme for the year over here on me. Um, just I think in these situations, me and you, our divergence on stocks we trade become very noticeable. And in a good market, we'll swim more in the same pools.
Yeah, no, that's definitely true. I'm reading 2% bounces on some low IV stuff, and that's not going to work on your end. So,
No, no.
yeah, that's that's kind of what what I'm after with a lot of these notes.
Yeah, I think that's the kicker is the volatility really matters on your side, and my side it's not really in the equation.
Yeah,
The open interest and volatility and all that, the delta of the thea or whatever the hell you do over there in option land, it just doesn't really
right, right.
translate to the stocks at all. Like it's not stuff I think about um, ever, to be honest with you. Um, so yeah, I mean, and that's where we are. I think we're here till start of quarter three. To be honest with you, it's just the market we're going to be in. We're going to have some very big movers, but it's stuff that just looks like trash right now. Like that's how it's going to work. For me, there's a couple names I don't want to drop here because I want to get a clear read on you for, but there's some that have pulled back significantly. Fuck it, I'll say it. I don't care. Starbucks, Roblox, like I'm interested in the flow on those right now because they look like opportunities down here at this level where you're just not going to get that from Apple, Microsoft, Nvidia, and all the other names. Zillow, I could throw on that list as well too, back here at 40. Um, it's more of a swing trade. It's not going to pay you this week, but the way our stuff works, I mean, Lyft's a great example. You wait a couple months and it'll come through for you.
Absolutely. I mean, Apple had that great move off earnings. 185 still just such a big issue to me that it's really that yeah, I could go to 200, sure, but I mean they got to stop selling calls at 185 before that happens. So there's just we talk about more room above than below. That doesn't fit the category there. I don't think you're just going to get killed by an Apple at 182 bucks, but you could go red on that. We could bleed down. I don't know that we're going to get back to our entry on it, but with a lot of them like that, I think you get maybe halfway there.
Yeah.
That's what Snow did, and that's I kind of expect that to continue as well.
Well, yeah, your 160, 150 on Apple's going to feel real bad if you bought at 183. It just is. Um,
Yeah,
and that is possible. You're kind of a when we talk ratios, you're kind of a 1-to-1 ratio on that play right now, which is why it's not appealing to me. I mean, what's the upside on Apple? 200. I mean, that's where we are right now. So if you buy it at 180, your downside's 20 up and 20 down. It's a coin flip currently in these conditions, and that will change. I think that'll change this year. Apple will be appealing. It's just not on the I don't know how else to classify it, but the market pouting over interest rates, which is just currently where we are.
absolutely. And I think the AI angle on Apple hasn't even really started yet, and that will be a thing, I'm sure. Product wise, there just isn't much in the pipeline that's going to really move things. They make great stuff, but the market wasn't really ready for the snow goggles to be the thing. New iPads aren't going to move it, so um, it'll get going. We'll see it. I mean, we read Apple really well. I check it all the time, but yeah, I mean, so it's positioning, and same thing with Microsoft too. Which Microsoft I think might have a pretty good week, but 420 is kind of your upside. It's 414. You're trading $6 on a $3 trillion market cap stock. So yeah, I mean, we just we kind of need to bleed out a bit, and I don't know what's going to cause it, but that's going to open up all kinds of things if we do get some sustained downside for a bit.
Yeah, I think you just nailed it on the head. Like, what will actually just make these things flush? Um, when we started calling the
Yeah,
top, we were like back to the 480s even on SPY, and it just the market's strong. It really is, but strength doesn't always mean that you're going to have wide range to the top. Sometimes that just means you're going to hold a level, and that's currently where the market is in my eyes. Um, and again, I think we're here till Q3 at minimum. And then I really feel we're going to get the red versus blue argument, people piling into each side of those, where energy's doing very good, or um, you know, clean energy. is going to do very good. You're going to get that divergence for who's going to win in November. But I really don't see a reason to push us higher until then. So sideways it is outside of individual names that do get good news and will perform well.
That's, I mean, one thing about our whole setup. Those those names do, they stand out, and I get, some of the ones I post, I get a lot of questions about the business model and whatever profit to earnings ratios and shit like that. But it really is just the flow is there, and the chart is good enough. I mean, sometimes the chart, like, it's like, well, there's no floor, and in those, just kind of size smaller. I get Piton was sort of like that
Yeah.
for me. I mean, I did see. I mean, yeah, Piton could be a disaster from here, but um, I'm not like the people bagged on it $15 ago. This is a new position for me, so I can park here for a while, and then that panned out. Um, the bios are really interesting to me, um, just because there's so many large caps that have done well, and I just see it like an internal sector rotation where they're going to just pick up some of these smalls that have just absolutely been killed. Any kind of news just sends them flying, and I think NVAX is just the first of many that are going to do that. So I'm gonna have fun trying to spot those, I think.
Yeah, I mean, I think Piton and the Bios are kind of in the same pool. They were left for dead, or they are being left for dead. So any positive catalyst, you're gonna retrace a little bit to the north. I mean, if you look at a weekly chart on any of those, it's not even really a move in most cases. And um, if the news continues to come in on those, those have the most range left. So I think that buying the red candle or buying bottoms right now, you're just way better off than even trying to catch trends on a lot of things. The only place I would stay in trends are with energy and metals and materials. I think those trends are good, just because you have a commodity to follow. Um, but your startups, it's not the time to be in the startups or maybe even the IPO list. I'd much rather buy China right now, to be honest with you, in that regard. Or again, metals, materials, natural gas, oil, all that stuff that you have something tangible to go off of.
Yeah, nobody pays attention to gold earnings out in the Twitter world, but if any other sector were doing what a lot of these earnings are doing, I mean, it would be a big story, because you are seeing them, a lot of them, pop 11, 12% um, on stocks that don't usually move 11, 12%. And so that is just showing you that there's a big divergence still between the price of some of these miners and the fact that gold is up where it's at. And they uh, they start to catch up. I mean, if their leases and their whole setup is decent and they don't have a lot of problems there, then you do see some pretty big moves in those. Not the easiest moves to catch, but that's why I think you keep a piece of it, and that's kind of been my take on gold for a while.
So a lot of those names are $3, $5, $7, and the moves are slow. So for me, it's an
Yeah,
easier trade, right? I mean, you're not gonna buy a car off the goddamn trade, but you're gonna keep the lights on. You're gonna have a good week. A few weeks from now, if you just get a spot in there and really manage your sizing. I think you nailed that on the head when you said that. Like the sizing is most important. I wouldn't go full size on something that's already ran 25%. But I'd get a piece so you can get the next 25% that's going to happen over the next month or so. Because that's just where those charts are from pretty much all of the miners we follow. I mean, that list is pretty damn long at this point in time. Same with silver.
and little little piece of my process is, when you have a setup that's taken shape over 4 6 months, and that flow is still intact, when they add to that, and then it's an earlier expiration, that that's that extra little push. And so, yeah, I'm definitely seeing that there, where I'm not really seeing it in some other sectors. Just real quick on oil. Oil's down under $78. That still to me, there's nothing really. It's not a big deal. It's not problematic for it to be there. It's just kind of range bound right now. It's tightening up a bit. You wouldn't really want to see it linger below 72, but there's a strong possibility that the stocks aren't going to really react that much to these little 0.5% or 0.75% drops in oil, as long as it kind of stays in this range. What you're wanting to see to the upside, we really get going. I still think 92. Um, you break out there, and it's kind of it's on, and I do expect that to happen. But we could hang out here for a bit. So good time to DCA and build and some things, and then sell some pops here and there.
No, I agree with that. Well, I think there's better spots, your gold, your silvers, your miners, than oil. But when we were on oil 3 months ago, you're definitely not bagged right now in any position. I don't know how you could be down, unless you're an
Yeah,
short-term options trader. Um, those charts have been very successful off of our levels for.
and when and then rounding out our here, copper is still more or less kind of on the moon at 464. Could definitely make a move to five, but I think you with copper want to kind of just stay with what you're in or wait for them to have a bad day. It's I don't know. I mean, if you're buying FCX for the first time up here, I don't know where you were under 40, 51 now. So kind of looks like 55. But again, here we go again, 51 to 55. Downside 46.50. Get back into that, back under that. Um, so yeah, you really, and I think in copper in particular, copper aluminum, there's still some opportunities, but good time to be picky, I think.
That's one of my favorite calls of the year. Was that SCCO $100 break, Southern Copper $100 break.
Yeah,
I mean, we got 20% out of that. I paper handed it at about 10-12%, but like I'm not buying up here. I'm not. Um, I got to see this. I mean, this consolidation is going to have to happen probably for 6 months before I got a level I can trust up here, unless we're going super intraday. But then you kind of run into that, is $4 or $5 enough? And share side on $100 stock, it's just not it for me. That's the big that again. That's that
it
divergence I talked about from the share to the option side, where 4% might work on a low IV stock, but it's not working on a trade on share side.
well, you can't day trade SCCO. I mean, the spread is like $15. Um, so you're kind of stuck. It's hard to get out basically. So it's a for options on that one. Got to be a swing where time doesn't really matter. And again, you're not in a good spot on that. Can't really short it either with copper up here. So either keep what you have or you stay away. I don't like to see a lot of big FOMO in our room unless you're kind of know what you're getting into. You're like people want to chase GME tomorrow. Yeah, it could get crazy. That's fine, whatever. But when it's something that we've had that was on a level 20% ago, sometimes 30-40% ago, I just don't know what people are doing other than they see the name and they just waited so long because they wanted to see it work. Well, you know, you're in a much worse spot up here, so no reason to do that.
If someone says GME in the room tomorrow, I'm logging out and booking a tea time. I'm just gonna tell y'all that right now. Like if
It
someone
happen.
asks about GME, you can play it when the volume spikes come. I mean, the last 5-6 days of volume, that should have been your play. But again, if you're greedy, you're probably going to get bagged. If you're a cup filler, your cup's already filled and you moved on to the next trade. My GME is Upstart. Like if you're going to play one of those, that's the one to play. If you're going to play the shitty momentum squeeze moon shit, it's not GME at this point. It really is not. Even though it had probably a couple of great trades over the last 2 weeks, Better fish for sure.
I'm with you on that. Yeah.
Um, I want to make a little point, not to get too far off track, but just because I've been on vacation, I'm three of the four done. This week there was two trips, one to Vegas and one down to Portland here. Um, but what makes us special or what makes us good is that we're on these screens every day and we're in the same stocks every day. So you see things, and like Professor says it all the time, when you see buyers piling back in or when you see buyers doubling down on a bad day, that's really what the difference is here. That's our signal. It's not a price. It's really not even a level in most regard, because I depend on time and
Yeah.
sales in level two. And the same thing on your end. It's not Datadog at 220 or 120 or 76. It's the way the buyers react, both on the option and the share side, at or around those levels. That is very telling because it's completely different than it is on a normal day that we see, let's say, 20 of the days a month. And those 2 days that are different are the best buying opportunities throughout the month.
Yeah, absolutely. And I think, I see people sometimes, there's two things. I mean, one is a stock gets back to a level and they're like, they just buy it there at that line. And that's not really how pivots work for me usually. That it's not just that, oh, it's at this spot, I'm going to buy it. Like I see it approach that line, and then I see how buyers react to it. Coin 220 is a good example. If coins at 225 and it like, does kind of a flash crash under 220, that's usually a really good trade because it kind of hits that oversold intraday look, and then the calls come in. If it slow bleeds through that line, that's a different scenario altogether, and that's what it did, and it fell to 200. So it's not just, yeah, it's absolutely not just about price. It's about quite a few other circumstances, and then it's really just about um, how buyers react, or if sellers come in and get aggressive. So that's one big thing. Yes, you want to pay attention around the pivots. The pivots are not a buy signal though. Um, and I, the people actually stopped doing this, the option trigger thing, um, where it would be like way out of the money, and then like it's like that's when you buy. That doesn't work at all. Most of them quit doing that. They all switch to SPY or whatever. So that's one thing. The other thing too, I enjoy getting questions, and that is you know a part of the process. But also, I mean, I don't really need people to try to steer the option reads. Um, you steer the option reads. That's part of our whole process. But someone just being like a stock I haven't talked about in a while, hey, check this one out, especially right before market open. I don't really want to do that. I I promise you, I am looking at what you're asking about most likely. So unless you have a flow read that you did that you want to run by me, or if you have some big compelling TA reason, um, just bringing something up we haven't talked about in a while really isn't doing much to move us forward. I don't think.
Yeah, no, I covered. I didn't have much on stocks and read the room. I don't know if you caught it, but I covered basically that. Like I look through 400 stocks a week. I ain't missing it. Trust me. I'm not. If it's compelling at all, I'll find
Yeah.
it. And that's one of the biggest things we do is limit the market to names that not only have volatility but we're familiar with. And we might not catch the exact bottom, we might not catch the exact top, but we'll catch the bulk of the move inside a zone once those checks and balances are there. Um, and it's not easy, but I mean, if you go out there and if you turn this off and go out there and try to do this on your own, there's way too many stocks. So we've limited our pool. I mean, whether we've limited our pool by sector over 3 years now. Um, and we kind of try to stay in those same ponds just because we visually can see what they're going to do and we're confident in those reads. Um, if you're not there, I don't give a fuck about your head and shoulders. I don't care about your open interest that you see from unusual whales. because it's not really a trade signal. I mean, it may be just a one off, and that's not gonna not only not build you anything short term, but it might be a turnoff through a bag if you're wrong. So seeing the process be repeated and then repeating that process, I think, is more important, and then you'll get confident from there. You don't start off confident right away. I mean, once you start chasing the dragon or have the tiger by its tail, like Professor with coin, that's where the confidence comes in because you were there for the whole show. It's not because you woke up one morning and seen something that's a little different and you decided to follow it. It's just not the way it is.
And with a lot of them too, the going in and me specifically looking it up isn't actually how I find it anyway,
Yes.
because I already have filters set up. So it's like I'll see it just sort of organically by the setups I already have and the sector filters and all that. So it's it's not really always that useful to go jump in and look at that. That's how I feel about there's so many. Most Twitter option flow accounts report things after the fact, and they do it for engagement. And it's like, oh look, somebody knew. Um, but for any stock or for most of them, if they don't move or go down, there might have been what looked like a really bullish option flow setup there. So there's a lot of survivorship bias in that, in those stocks that make this parabolic move, and then you go back after the fact and find the option orders. That is completely useless to me as a process. Yeah, some of them, it's like some insider on Congress, or I mean, it's interesting in that regard, but I want to get in before the move happens. So I try to find ways to do that, and that setup is different depending on sector, stock, market cap, etc. So yeah, there is a lot more that goes into this than you know the the ask side calls on one given day or something like that. So um, just if you want to jump into my process, there's going to be a lot to it. More, so just be aware of that. And we haven't had many flow majors yet in the room, so that's
From
fine.
from the cheap seats, I mean, y'all can steal it, and I would steal it. But that's a great question that I ask all the time, Professor. And it's really where you should start. And you kind of just ran it through. But I ask him that: did you find that organically, or did you search for it? And that's very telling to me
Yeah,
if it comes up in his filters. That's all I need to know. I don't need to know what his filters are. I don't need to know which filter it hit. Just did that come across your table like randomly, or did you look for it, or were you searching a sector, or did that just pop up overall? And usually your answer there will dictate to how overwhelmingly strong of a signal it is on my end, even like if because if you're not looking for it, if it just comes up organically, it's usually a good sign in my opinion.
I have to. I check myself in that process too, because I do go through and out of curiosity, I'll look up some or whatever. But yeah, the best ones are the ones that come to you, and so it's all about setting up your your environment in a way that those are going to emerge to you.
Yeah, no, mine is like it's fucking 150% volume on a Wednesday of last week, and it's on my level. That came to me,
Yeah,
like
yeah.
I find it through my volume scanner. It came to me. I didn't have to look through all my charts. And that's I fight that every Friday, like you're saying. Like when I'm going through charts, just because it's on my level, it's on my dollar level. Do I put it in notes or not? I'm looking for the extra three or four checks. I think that is where we're a little different because I'll find the level and then look for the checks as opposed to coming through the check system and it's on a level. But it's the same. It's the same thing. It's having a list of certain things and not just getting tied to one thing. Um, Especially if that thing is just a lot of open interest or a head and shoulders on a day chart or some shit like that.
Absolutely. And we've the like the all time high chart setup. I mean, that's one we've been through for a while, and you've kind of seen how that can how that can work, even though it doesn't match your style, I think you've done a good job of talking about some of the possibilities there. You preface it all time high chart. However, you know, here we go. It could do
Yeah.
this, and then a lot in that. So
Yeah, I legit
yeah,
added the 20, this line right here, this white line, this 20-day volume profile. It's on my day chart as well, just for your all-time high charts. Like, I had to write something for it so I could give you something instead of, like, you know, kind of going against the grain of what you're finding. Because I definitely find
yeah, because we're not
value. Go ahead.
we're not going to do fibs and Elliott waves. Yeah, that's just not not part
No,
of our deal. So
no. But
yeah,
I'll go down to 20 days. I'll go down to volume over 20 days and find
yeah,
the biggest level of 20 days and call it a local pivot. Yeah, I'm not going to put a line on my chart historically off of that. But if you're going to trade it short term and the percentage works for you, like Lily's a great example. If the percentage works for you on a trade like that, here's your level. If not, it's RTL levels on the day, and if even when those two line up, either when your daily volume profile and your RTL levels line up, um, those probably do pretty well on the option side. Again, it's just those 2 to 4% moves that don't really equate, especially with the price points to shares. Or although there's some of them, and I could name them from Lily to SCMI to MSTR, where one share gang would have done just fine when you started talking about them, and they were at all time highs at that point.
yeah, yeah. I have a few of those. Some I've kind of gotten into this thing where there's stocks I'm pretty sure are gonna split, and it's like I just want to get to 10. I want to get to 10 shares, but I don't want to buy. I don't want to overpay. I don't want to pay $1,400 for AVGO when I can get it for 1,200. So yeah, I'm trying to stack up some of those. Now, if they do something, they only do a 4-1 split or something like that, then I wouldn't have my 100 shares. But that's kind of been the goal with some of those, and I built a lot of those from that initial one share gang thing. For me, it's usually three, but yeah, that's done well share side. And we just have so many like that. The way these mega caps, Facebook and Netflix and whoever,
Yeah, yeah. For me, it's proof of concept. The same with like the oil charts. Like I had to watch those the first move, um, and then give them some time so I could trade them. And I'm there's a list of ones that I'm in that are usually the Mag 7 ones, and there's a list of the ones that I was like, crap, I should have gotten those, but I'm not gonna miss them next time. Like MSTR 860, let me know I'm in. I'm definitely getting
yeah,
a piece when it gets back down to there. I'm not doing that again. But you kind of, again, you need the main point I want to make today is you really need to learn the stock and understand the stock and to anticipate the moves. It's real hard just to jump into something that's going to go parabolic over the next 6 months. And you're kind of gambling at that point if you do. Just safer for me. I have time. Our process works. Give it some time for you to understand the class you're taking or the stock you're reading or the stock you're trading.
yeah. No, I'm totally with you on that. The in the option world, the one thing I think you really want to avoid is hesitation, because uh, that can just kill you. And I cannot stand to see people buy when I'm selling.
Yeah.
I hate that. I mean, a lot of furus live off that, but there's nothing about anything. I'm not pumping anything. I mean, I'm buying stuff people don't want or never heard of. But yeah, you don't want to just watch it move and then overpay by $100 for your one option contract, and then it doesn't work. And so yeah, just avoid that process. Know what you're gonna do beforehand. And for me, it's always, if this happens, this is what I'm gonna do. It's not just I'm doing this, but I got to see this first. I see this, and then we go from there. If I don't see it, I don't buy it, and whatever. So early in the morning, it could be one trade, could be three. hardly ever just zero, but I mean that happens too. But I think you just want to, make sure you're decisive in your entry and your exit. I exit. I call up the minute chart. I exit. I have a price in mind, or it's not really a percentage gain in mind, but it's just a behavior of the stock is what I'm after, and that's kind of when I get out. And it's really easy to see the ones right now that are getting tired, and that's happening a lot in software. So you don't want to get caught in the fade part of the pop and fade. Then you just stare at your screen while it goes down. Bad place to be in the option world.
Yeah, no, I think that's one of the things I had to learn, or I don't know how to say it without being rude, but I'm just gonna be rude. Sorry, P. Don't take it the wrong way. But I was like, there'd be some weird stuff you would never shut up about, and it was every day. And at some point in time, I learned that, well, he's learning this stock, and he's sharing that knowledge. He's learning that from reading it every day with the room, and there's a lot of value into that 3 to 4 months down the road, or 3 to 4 weeks down the road. So the
Yeah.
initial, the initial like pound the table over it, like you're just learning how that moves and seeing if it fits the style. And I think a lot of people don't pick up on that. Coupled with when it does move, that's confirmation to trade it. And that is a recipe for a disaster. You should be in there following that thing when Professor's talking about it originally, not after he's talked about it and it has moved.
Uh, yeah, yeah, absolutely. And then my last little pet peeve, and then we can move on to spy.
Perfect, perfect.
Like, if you want to push back against a setup I'm posting, you want to give me a counter argument. I'm certainly open to that, but the idea that you come at me with some completely different reason about like oh, this company's in trouble, or the opposite, like I'm like, this, I think is going to fade off earnings, and then it's like, yeah, but they just had a great report. Why would that happen? Why are you doing puts? I like, that I just, you can just, okay, just watch what happens. Watch that. Maybe I'm wrong, whatever. But even if I am wrong, I don't think it's necessarily because of the reason that
Yeah.
you read the report for 5 minutes and then it goes. A great earnings report is excellent for a month from now. For it, a stock to get in an uptrend and sustain it. The day after it happens, that's often not what's moving the stock. It's a lot of other factors, a lot of option activity, um, calls closing out, puts coming in, a pullback and then a secondary move, all of that. So the counter arguments need to be based on the same things that we're working on. Otherwise, it's not very useful. I don't really feel like answering those questions. Like I'm not interested in that. Um, we can talk about that later. But like right as the trade's about to happen, you come at me with some counter argument about the setup. If you don't like my reasoning, don't do it. Some of them I don't even post reasoning. In fact, the notes I say less are sometimes the best ones. So yeah, I don't stay within our parameters if you want to discuss these stocks. Other than, yeah, let's have a convo after hours, or you learn something, you want to tell me about what you're reading about. That's fine, but I don't need counter arguments for my notes before they happen. Honestly, I'd really
Yeah,
like.
you're not. I mean, not predicting the future, and that's what a lot of people try to do with that is predict the future. I mean, you have to let the play out, and there's going to be tails along the way. For me, it's mostly volume related. That yeah, I can't predict if volume's going to stay in X, Y, or Z after that initial pop. But if it does, I know where we're going. I know what levels are safe. So it's that anticipation, which I don't think you can guess or predict off a report or trivial things like Fibonacci's or stuff like that.
Yeah,
Let's get to some spy. I don't know how much gas I got into me tonight. um,
yeah,
where we had we last week we were real close. We had close levels in general. Our we didn't come close to the bottom though. We were probably $10 off the bottom. We both had a little bit wider range, but $1 or $2 off the top here. You were 519. I was 518. 513 bottom, 522 top. Kind of got over that big drop candle, but we're still inside the 425, 424.61, whatever you want to call it. Last high. Um, I really feel we're staying here, P, for a while. The 425, 500 range. Probably getting tighter along the way, though, in my opinion. Um, I just don't see us breaking out here. I really don't. I could be wrong, but I'm interested in your take on that.
Um, Puts still dominate the open interest, but they're not really that promising as a for directionality. I mean, they're doing a lot of selling at 500p for May and June. Have flipped pretty bullish, so probably not breaking below 500. Probably not even testing 500. And then there also isn't much upside. There's like 524 this week has some possibilities. You've got a lot, you got like CPI and all that this week, so you're going to see a lot of straddles on both sides. But yeah, there's not a clear direction except I think they're moving the floor up. That's my main read I get out of it.
Yeah, yeah. So again, tight range in my opinion. Yeah,
Yeah.
CPI, PPI going to be a crapshoot this week. There's a lot of individual sector news as well. Um, which if the good outweighs the bad, maybe we do get 526, 527. But I mean, that's not a substantial move. I think we're both on the page. 500 out of the question, and he's kind of walk it up. 505, which we thought last week, that's kind of where we were, was the floor. That's probably out of the question. So is it 510 or 515 being your floor, or some weird dollar amount in between it? But that's what I'm seeing from a TA side in general. Like the 505 is kind of like the hellish move down. We're not going to get it. So probably 512 again, 513, maybe with a little more upside this week. Um, yeah, not having screen time here the whole week, though, kind of throwing me off a little bit, especially on this.
So I'll throw some numbers out. I'm gonna go 510.70 and upside. Uh, yeah, I'll go 523.92.
23, I'm going to be the bull here just because that's my style. 526. 69. Shout out Goose. Get your all time high there. And if we pull back after initial pop, I like this 517 area just because it stands out on my 20-day. You see it right here. I like this shelf right here. It stands out. I have an auto RTL there from a couple days last week. So if that holds, that kind of is a bullish signal for me. And I still have $9 range there, which is kind of a tight range for SPY. So I'm looking for a bullish week with a low top. Because I kind of think that's where we are here. Still sideways.
Um, where are you at on crypto?
What's Bitcoin at right now?
61. It's been floating there for a while. You had a pretty decent dip on Friday, and that's what took Mara down.
Yeah.
Down a bit, MSTR, nothing major, but it fell from 60 over 63 to under 61 in about an hour, and then has been just kind of hanging out. I guess it's a bear flag, maybe, I don't know, but yeah, it's just sort of been flat most of the weekend after that.
If for me, I did make a little notation when I was going through charts on crypto, and it's if you're just trading like one. If you're a Riot or a Mara trader, um, they might miss the boat on this next push to even say 63, 64, 65. But the stuff that's on a level, um, that's where I'd want to be. And we have a couple names. I don't want to bring them into this session, but we have a couple names that are really on a good historical level that if Bitcoin gets a pop, those are going to be the ones to play. Um, but that sector for me rotates in that regard. Like if crypto runs 10% or 20%, the same charts that moved well last time aren't going to be the same charts that move well this time. There's going to be a different set of the ones we follow. And that cycle just hasn't really stopped. That's what I've noticed the whole time we've traded crypto. Like sometimes Mar and Riot are good, sometimes Iron and Estig are good, sometimes Hut and Hive are good, and it just kind of depends on where they are when the floor's down and the big move comes in. Um, yeah, yeah, that's just kind of where I see them. So there's three or four names that I love that I think are way better to be in, and then there's a couple right now like if we don't move, they're gonna have bad weeks. They're just gonna have a crappy week overall because they have so much more downside to get back to a level that we trust or that I trust.
Yeah, I'm with you. I think the way to trade these, you park in the smalls that have that flow for August to November. There's several of those, and then or you do the 15-minute trade on Coin MSTR. So that's the option side thing that works. But yeah, no, I'm with you. It's not a you're not going to get the sector full send
No.
um, with down here at 61. That's
Yeah,
just not going to
I
happen.
got a question for you on crypto. I just want to see where you're at, or I mean, and you can totally say I don't know. You don't have to have an answer. That's fine too. But Riot or Mara right now?
Yeah. Riot. Yeah.
Interesting. Interesting.
Um, that the like that reaction um, to earnings and Riot. Under my I got this line at 1150. Um, it's just setting up a little better on my end.
Interesting.
If Riot falls a little bit further from this, though, yeah, I might change my answer. But initially, Riot's a better chance to get back to 1150 than
Then Mara to 20.
20. Yeah,
Interesting. Interesting. Yeah, I think that's how you have to look at it right now. Is which one is set up with the best ratio, and then which one doesn't have as much to bleed out so you can be early on the next move. Um, and then watch the commodity again. Bitcoin probably breaking 60 probably kills all the charts. Running up to 63, 64, 65 probably runs the ones that are lagging behind a little bit.
if um if you got Mara 35C with any of those clowns online, you're in some trouble. You should probably just close that out.
Yeah, yeah, probably not a good spot to be. Trade some Dig and some Iron, please.
Yeah.
For sure. You ready to get to work, P?
Yeah, I'm gonna grab a coffee. It'll get me through the notes. But
Perfect.
yeah.
Perfect. All right, like and subscribe for more and all that nonsense.